Hey, welcome everybody to the 40 Finance channel. Today I've got 5 stocks under $20 that I personally am going to add to my watch list. If we get any sort of market correction or downturn, it just keeps going up and up and up. But if we could save a couple bucks on these stocks under $20, I think that the future looks decent for them, at least based on the fundamental numbers. So this particular list is more like a stock screener list, where I just go through some basic fundamentals on my end and pick out some names that look good on the numbers basis, but they do need a little bit more research. Certainly the qualitative side of research, where you're getting into, the press releases and the rumor mill and all that stuff, earnings reports, etc. All right, so with that reminder of do your own research, let's jump in to these 5 stocks under $20. First stock on the board today is Ford Motor Company. Obviously Ford, one of the biggest American car manufacturers, and it's in a little bit of a rut right now, and some of that is due, of course, to the chip shortages that we're seeing everywhere. And there's a lot of doubt in Ford world on when some of these electric vehicles will make it into their product line. And I think the most important one there is their line of trucks and SUVs. That's what's kind of taken the back seat right now. So you see how the momentum has subsided recently. This had a high of $15.99 all the way back in June 3rd. We're at $12.82, just barely above the 200-day moving average of $12.24. Got an RSI of 41, so not a ton of interest in Ford right now. However, if we go over here to the projections for Ford, this is current year 2021, earnings coming in at $1.61. That's what the consensus is right now. Next year they can add about 30 cents to that if analysts are right. So you're getting closer to that $2, which obviously would put the PE in the range of a 6 or something like that for a forward PE. And even on the sales side, with the adjustments that we've seen in revenue, you got plus 13% this year, plus 20% next year. The problem here with Ford is that they're fighting this car game that's going on that a lot of automakers are fighting as well. But they're losing sales every day, right? Because we don't have the new inventory. So that's the fear in today's marketplace. All right, taking a look at TipRanks to see what the best performing analysts think about Ford. It's been a little while since we've gotten fresh updates. Last month and 2 days ago is the best we have. We do have a few holds. This sell here was from 4 months ago, so I'd say the landscape has changed quite a bit. But mostly upside here. Even on the holds, you've got a 15 and a 15. And again, with Ford, I think with this stock, you really want to find the bottom. Okay, you really want to let some of this air out of the tank. I think the bad news for new cars and chips probably keeps on for a little bit. But if you see a market correction and this one perhaps randomly dips under $10 and you don't mind holding it for the long term, it seems like a stable investment, particularly when those electric pickups come out. That's going to be huge in America. All right, next on the board we have SoFi Technologies. And this is one that I added to my watch list a few weeks ago because I was downright surprised that Morningstar had SoFi fair value somewhere in the neighborhood of $16. And for a conservative firm like Morningstar, I was taken back that they basically have a company that's not profitable and they still put that kind of fair value on this one. So I've been watching it. I've taken that very seriously. And you see what's going on here year to date. You had a huge peak in June. Looks like 6.8 or so. You're at 23. Kind of melted down from there. It's bouncing back up to the 50-day moving average at about $15.50. But with SoFi, this is one for the future if you believe the story. Now, on the one hand, I worry a lot about the competition in the sort of fintech space. But on the other hand, if you dig in deep to the SoFi details, they're really going after credit score worthy individuals for things like loans, investment accounts, student loan refinance. They also have a really great app that they use. So it's one to watch for sure. If we go to the analysis tab on Yahoo, try to get a feel for what the consensus is, you only have 3 analysts that will stick their neck out for SoFi right now. So that's not a ton of people. You have to be careful with this kind of sample size. But they are growing EPS. It might be negative, but next year you get a little bit closer here to profitability. And then as far as revenue, which is likely more important at this point from a stock valuation, you got 50%, 51% growth next year. I did some checks on another website, and price to sales next year, it's at about a 12x right now. If we did hit this consensus estimate, you would get a little bit closer to like an 8.5 price to sales valuation for SoFi. All right, on the TipRanks side, again, we only have 3 analysts, but they have updated one and 16 days ago and the other 2 days ago. Rosenblatt, this Sean Horgan, he's up to $30 supposedly 1 year out from now. Then you got to hold at $16.50. I'm kind of in the hold category for myself with SoFi. However, again, the market continues to run hot. Is there an opportunity on the right day to take a few dollars off of the current price and maybe sneak in for the long term? It's certainly worth considering. All right, next on the board is Matterport. And this is one that had a ton of fame way back in January, I think, before their IPO. You had a price at $24.46. This company makes 3D scanning cameras, mostly for real estate, when we sort of do that 3D look through all the floors of a house. They also sell the software, the camera, all the things that you need to do. They're certainly an industry leader. I got really intrigued with it when I heard other folks talking about it, but at the time I let it pass because I felt like, the price just wasn't there for me, and I always worry about new competition coming out and what happens to a company like Matterport. But what we're seeing right now is a little bit of a discount, certainly from the January highs. You're at $16.93 today. That is a run-up of 7% or so just while I'm recording this. You see the 50-day average of $14.93. That's probably what you want to target if it ever comes back down there. You need that RSI, though, likely to fall in the neighborhood of the 40s, maybe the 50s to get there, which you could actually see if we ever have a red day on the market. All right, on the analysis side, again, only 3 people tracking this one. This isn't a story of profitability yet and doesn't look like next year will be either. But your real story is on the sales. And then, of course, with each sale, they have the software subscription program, the whole 9. Now, as far as the people who are covering the revenue estimate, which we actually have 4 who are doing it on the revenue side, plus 55% for next year, and we're going to start looking ahead to those numbers from a valuation standpoint coming into the fourth quarter. Most people's calendars, from an analyst perspective, they're going to switch over to 2022. I still think you're flying blind a little bit on Matterport, to be honest with you. There's not a ton of coverage. You're going to have to dig deep in the earnings report. And I also think that if you like what you read, you're going to have to hang on to this one for a little while to let it grow into its valuation. But there's certainly some intriguing things going on here. All right, on the TipRanks side, we've got a few analysts from 25 days out. You've got all buys, price targets, a little muted, 20, 22, and you've got an 18 here. So again, even though the stock is under $20, there's nothing wrong with rooting for a little bit more of a discount if you can get it in the right market conditions. All right, next stock is another beaten down popular name from wintertime. This is Workhorse Group, maker of electric commercial delivery type trucks. And this one saw a lot of press and hype in January and February, reached $40. Today you're down to $9, and you see the 50-day moving average, which is the purple line. You're even trending under that. So this one's getting into a situation, in my opinion, where if you have any belief in the company or where electric vehicles might go, it's starting to get to the point, in my opinion, where like the upside is definitely starting to outweigh the downside. Taking a look at the analysis tab, and this is what sort of attracted me, and I'd have to read a lot more. This year, they're going to lose about $2 a share, depending on when the final numbers come in. Next year, making significant progress to minus 50 cents a share. And then on the sales side, they'll actually have sales, which is a bonus. So you have maybe 14.6 million comes in. I'm guessing that's like deposits on future vehicles, but I don't know that for sure. And then next year, kind of a 10x game. It's not a ton of money, but going from 15 million to 112 million, it's certainly on the right track. All right, taking a look on the TipRanks side, we have a couple updates, but most of them are pretty dated, probably because the company doesn't have a ton of revenue coming in. You have one buy at 14, then you have a bunch of holds, including two in that sort of $9 range where we're at today. So again, with Workhorse, the momentum is downward, right? And if you combine that along with some of these other stocks, if you take negative momentum and you combine it with a broader market event, you could see a nice little discount. And frankly, this one, the company's based really close to my house in Cincinnati, Ohio. So I've never visited. I don't have a ton of interest in the EV industry right now from a stock perspective, but Workhorse might be one that I throw a dart at, buy 100 shares or something like that. We'll have to see, but it's unlikely that I'm going to buy it at the $9 range because it does look like it might keep sinking. All right, last one on the board is Paysafe Limited. This is a stock that I actually bought in SPAC times, was super excited about it, but the momentum really just fell off a cliff, and frankly, I just overpaid for it. But the times are changing a little bit. I sold this one in mid-August, and already there's a couple developments that have piqued my interest. So when my 30-day wash rule ends, which will be mid-September, really not that far away, 7 to 10 days from now, I would be eligible again and still be able to take the tax loss write-off. Paysafe is on the board. So right now you're at $8.93. I managed a cost basis somewhere in the neighborhood of $14 through these ups and downs. I got way too excited about this one. You see what's going on. It trended under a 50-day moving average for literally months on end. Then it took another steep decline, and we're sitting at $8.94 or so today, RSI of 45. But here's the reason that I'm kind of excited about this one. I was reading an article where Bill Foley, who is the owner of Paysafe, he is actually an investor and key member of Win Interactive, which is another SPAC that's coming out here sometime this year. But basically, it's Win Resorts' mobile online gaming platform. And this is just rumor mill from me, not even rumor mill. This is speculation on my side. Could Win and Paysafe and Bill Foley, could there be something in there? I don't know. I don't have any evidence. But the other thing that's going on with Paysafe, besides my speculation, is that earnings projections are going up here recently. So we take a look at the analysis. This company is not profitable, minus 4 cents this year. Next year, you budge right into profitability at 11 cents. But on the sales front, not 21 days ago, This number was in single digits. Now we're at 12.4%. As the gambling realization starts to form, Paysafe, if you don't know, is kind of like a PayPal Visa network for payments, except they mostly play on gambling platforms. They also have some digital gaming platforms as well. So the story's getting a little bit better from an analysis standpoint. Now, that being said, I'm not in a hurry here, but it's the same thing as the other 5 stocks. If we wake up to a red day and you take another 10% off something like this, or maybe it goes under 8, I have no idea, then I can actually take a tax loss, and if I'm interested, get back in this one for lower than I originally paid, and then try to inherit the long-term wins. All right, guys, so those are 5 stocks under $20. Again, this is more of a stock screener exercise. This isn't drop what you're doing and buy these. For me, they're all on my watch list, and I think that there might be some outside opportunities. A lot of dart throws in here, but hopefully we're getting closer to a time when some of these prices might come down. But to be fair, I'm sort of rooting for the market to see a little bit of a pullback, just because being a long-term investor, I'm more interested in getting better prices than I've seen all this run up. But that's just my opinion, and hopefully this list at least got your brain moving and gave you some ideas for the future. If you liked it, please give a like to the video, subscribe to the channel. Thanks for all your support. We'll see you on the next video.